Hey everybody, welcome to Mortgage Today for Friday, June 28th, 2024. And oh, what a day it was. UMBS will open up 5 basis points in the green, though that was down 6 basis points from the highs earlier in the morning. S&P futures were up 23.5 points in the first hour. Last night was the first U.S. presidential debate. I didn't watch it, but I know your candidate definitely won. For sure, your candidate definitely won. Stock futures rose and bond yields fell as a cool down in the Federal Reserve's preferred inflation gauge reinforced bets policymakers will have room for cuts this year. Core month-over-month PCE came in at 0.1 on a 0.1 forecast. I don't know why everybody's getting so excited. It's still going upward. Last month was revised to 0.3 from 0.2, again going upward. Core year-over-year PCE came in at 2.6 on 2.6 forecast, right on target, but the confirmation of inflation progress worth a bit of a relief in the bonds, apparently. Personal incomes rose 0.5% month over month in May, beating the 0.4 estimate. Spending came in light, however, rising only 0.2% versus a 0.3 expectation, which is what we need to see happen. Importantly, the PCE Price Index was flat after rising 0.3% the past 3 months. Fed Bank President Thomas Barkin said the inflation battle isn't won and the U.S. economy is likely to remain resilient as long as unemployment remains low and asset valuations high. He spoke on Friday before the PCE data. Pending home sales fell 2.1% in May, according to NAR. On a year-over basis, they're down 6.1%. Things looked good in the bond market earlier this morning. While yields were still quite a bit higher than those seen earlier in the week, there was an immediate positive response to the on-target PCE data. The gains didn't last long, with sellers running the table between 10 a.m. and 11 a.m. Eastern Time. While some of the move could be due to traders moving to the sidelines ahead of a near-term potential potential political developments, month, quarter, and positioning likely had much bigger impact. Bonds ended the week at their weakest levels, but this pullback doesn't inform next week's trading in the slightest. That honor goes to the active slate of big-ticket economic data. The 4.29 level on the 10-year is broken as a technical ceiling yet again, but we'd hesitate to read much into it considering the month, quarter, and trading that was going on today. The upcoming week will provide a better sense of prevailing momentum, but the biggest reports like NFP and CPI always cause abrupt reversals. UMBS closed the day down 37 basis points on 100.17, so the month ends entirely in red, as you can see there. Next week we get a lot of stuff. So we get Monday, we get the ISM manufacturing data. Tuesday, Fed Powell speech and JOLTS job opening labor turnover. On Wednesday, we get Challenger layoffs and some more Fed speaking. We also get jobless claims, S&P Global Composite PMI, as well as ISM data. Then we get FOMC minutes. And then on Friday, we get earnings report, we get a Fed Williams talk, and we get non-farm payroll. So it's going to be an active week. So let's control the things we can, which is our own knowledge. So let's check out our sponsor at wellthatmakesense.com. This is part 5 of the Way of the Wolf series that has some great tips for managing your own mind to be able to sell well. And over the weekend, if you have some extra time, check out some of our common sources and influences, especially our sponsor at wellthatmakesense.com.